In a world where every dollar matters, one hidden trap lurks in plain sight. Your checking account, and it could be costing you more than you think.
Ever checked your bank account on a Friday night and felt like a king? $350 looking back at you, ready for the weekend? You head out, tap your card, and ignore the math. After all, the app says you are good, right? But that number is a lie. I call this the Friday night illusion. It is a psychological trap designed to make you feel richer than you actually are. Then, Monday morning hits, you check the app again, and suddenly, that balance has vanished. You are left with exactly $14.27. Pending charges, forgotten subscriptions, and that ghost money you thought you had is gone. The bank system just caught up with your reality. Stop letting your checking account trick you. You need to break the system before it breaks your budget. The secret is an automated high-yield savings account. It acts as a digital vault that hides your real wealth from your spending urges. Move your money before you can spend it. Turn that ghost money into real, growing assets automatically through smart transfers. Follow for more smart money habits and stop falling for the bank's illusions. Let's build your financial future starting today. Welcome to WealthTechSimple, where we make personal finance and investing crystal clear. Subscribe and start building your future today. Let's look at the ghost army that lines up against your paycheck every single week. These are the charges that your bank knows absolutely nothing about until it's too late. First, you have the hidden micro-subscriptions, the $15 gym membership streaming service, the $9 cloud storage upgrade, the $12 premium music app. These hit your account on random days. If one triggers on Sunday night, your app isn't, subtracting it from your balance on Friday morning. Second, you have merchant holds. Have you ever noticed what happens when you pump gas or check into a hotel? The gas station might put a temporary hold of $100 or $150 on your card just to make sure you can pay. For the next 24 hours, that $150 is completely frozen. You can't spend it on groceries, even though you only actually pumped $30 of gas. The remaining $120 is trapped in limbo. It's ghost money you can't touch. And finally, the silent killers, automated utility drafts, your electric bill, your internet bill, your auto insurance. You set these up months ago, but because they don't hit every single day, your brain deletes them from your mental math. When you look at your phone on Friday and see $350, your brain ignores the $80 internet bill scheduled for Monday morning. You spend the $350, Monday hits, the internet bill drafts anyway, and boom, you are deep in the negatives. The app isn't broken, it's doing what it was programmed to do, show you a snapshot of the past, not a forecast of your future. When you open your app, your eyes go straight to the biggest, boldest number. But if you look closely, banks almost always display two completely different numbers, your current balance and your available balance. This is where the financial matrix begins, and most people get it completely twisted. Your current balance is the total amount of money physically sitting inside the vault of the bank right this microsecond. Your available balance is what the bank thinks you are allowed to spend based on what has cleared. But here is the reality check. Neither of these numbers tells the absolute truth. Why? Because of the pending lag. Think about how we interact with money today. Tap, swipe, click, Apple Pay. It feels instant. You tap your phone at a coffee shop, your screen flashes green, and you walk away with a latte. But behind the scenes, the plumbing of the traditional banking system is ancient. It is running on infrastructure built decades ago. When you buy something on a Friday night, that merchant doesn't actually pull the money out of your account right then. They place a hold on it. The actual money doesn't leave your bank until Monday or Tuesday morning. So for 48 to 72 hours over every single weekend, your money is a ghost. It's sitting there in your checking account, wearing a little camouflage outfit, pretending it's still yours to spend. Your banking app looks at your account and says, "Yeah, go ahead, buy the premium sushi combo." It's like a terrible friend cheering you on while you walk straight toward a financial cliff. Relying on the app balance is like driving a car down the highway by only looking in the rearview mirror. You will crash. Watch the pending, not just the bold number. Let's be completely honest for a second. Traditional mega banks love it when you keep all your cash sitting in your checking account. They don't want you to fix this problem. They thrive on the confusion. First of all, they pay you absolutely nothing for leaving your money there. The average traditional checking account pays an interest rate of about 0.07%. Let's do some quick math. If you keep a steady balance of $1,000 in that checking account for an entire year, the bank rewards your loyalty with exactly 70 cents. Don't spend it all in one place. Meanwhile, what is the bank doing with your $1,000? The moment you deposit it, they take it, lend it out to someone else, for a mortgage, a car loan, or a business line of credit, and they pocket 6%, 7%, or 8% interest on your money. You are giving them a free loan so they can make a profit, but the real jackpot for traditional banking models? Overdraft fees. Because the mobile app layout makes it so easy to lose track of pending charges, millions of people accidentally spend more than they have. Does the bank stop the transaction and say, "Hey buddy, you're a little short today"? Absolutely not. They let the transaction go through seamlessly, wait for you to walk out, and then hit you with a $35 overdraft fee. Think about the sheer insanity of that math. A $5 latte just cost you $40 because of a digital delay that the bank could easily fix. It is a multi-billion-dollar trap built entirely on the friction between your checking account and your real-world bills. The checking account is designed for one thing and one thing only: transaction velocity. It is a transit station, it's a highway. Money is supposed to drive onto the highway, pay a bill, and leave. But what happens when you build your house on a highway? You get run over. When you treat your checking account like a storage unit or a long-term savings bucket, you are constantly exposed. You're exposed to spending temptation, hidden subscriptions, and the illusion of wealth. We need to break this cycle today. Alright, enough about how the system is rigged, let's talk about how to beat it. We are going to build a personalized digital framework that eliminates ghost money and forces you to accumulate wealth without willpower. We are going to use a high-yield savings account and HYSA not just as a boring place to park money, but as a psychological shield. Here is the exact two-step blueprint to set up this weekend. Step 1. Split the paycheck at the root. Most people get paid, let 100% land in their primary checking account, and say, "I'll save whatever is left over at the end." Let's be real, it's the end of the month and you have $4.2 left. You cannot trust your future self. Instead, you need to filter the money before your eyes ever see it. There are two ways to do this. The direct route: ask your employer to send 80% to checking for bills and 20% straight into a separate HYSA. The automated app route: set up a recurring internal transfer for the exact morning your paycheck hits. If you never see that 20% in your checking balance, your brain never classifies it as disposable income. Step 2. Leverage the friction speed bump. Most people complain about the 3-day transfer lag from an HYSA. I look at it as a financial bodyguard. If you're browsing Amazon at midnight and get hit with a sudden urge to buy something, you can't just tap to pay. Your checking balance is low because your wealth is locked in the vault. Do you know what happens during those 3 days? The dopamine spike fades away. Your logical brain takes back the steering wheel. Technology just saved you from your own impulses. Start your vault today. Now, before you run off and open the first savings account you see on a Google ad, we need to talk about optimization and avoiding the traps. Not all savings accounts are created equal. If you open a standard savings account at your traditional bank, you are completely defeating the purpose. Why? Because if you open both accounts under the same bank login, transferring money between them takes exactly 2 seconds. The speed bump is gone. You can be standing in line at a clothing store, see you're short on cash, slide $100 from savings instantly, and complete that bad purchase. Furthermore, traditional banks will still only pay you around 0.1% interest. You need to look for an independent, online-only financial institution. Look for platforms offering 4% to 5% annual interest. Storing $10,000 in this vol turns you $500 a year in pure passive cash flow. Compare that to the $7 you'd get at a brick-and-mortar bank. The second thing you must look out for is monthly maintenance fees. A true high-yield account should cost you $0 to maintain, have 0 monthly fees, and require no minimum balance to keep active. Lastly, insure deposits are protected by federal insurance like the FDIC or CDIC. This guarantees your money is safe up to $250,000. Even if the company collapses, the government guarantees every penny. It removes all the risk while keeping all the rewards. Start optimizing today. Let's summarize the new rulebook for WealthTechSimple. Your checking account is a highway. It is a transition zone. It should only hold enough money to cover your basic necessities and immediate bills for the next 7 to 14 days. Treat it like a loaded weapon. It is dangerous to leave extra cash floating around in there. Your high-yield savings account is the vault. That's where your emergency fund lives. That's where your down payment grows. And that's where your hard-earned money builds momentum at 4% or 5% interest. When you separate these two functions, the psychological shift is massive. Your checking account balance finally stops lying to you, because the only number left on that screen is money that is actually safe to spend. No more illusions, no more guessing games, no more ghost money. Taking control of your personal finances doesn't mean you have to track every single receipt on a complex spreadsheet. It just means configuring the applications on your phone to protect your future self, flipping that one automatic transfer switch takes less than 5 minutes, but it will save you thousands of dollars of stress. If you found value in this deep dive, hit that subscribe button and share this video with a friend who is stressed about their paycheck. Drop a comment below and let me know, what is the most frustrating ghost charge that ever hit your account? Until next time, keep it simple, keep it automated, and I'll see you in the next video. Thank you so much for watching. Click here to keep learning and leveling up. Don't forget to subscribe to join our community. Let's build your financial freedom together.